Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the BoE GDP and probably an orb trade here coming up relatively soon. So I want to welcome everybody to the live stream today. We are sort of going early this week on Tuesday and Thursday. We might keep it this way for the near future. I'm not necessarily sure yet, but there's a lot more action this time of day. And I would like to get into some live trades. We've sort of been really flat for the last month or so, really since the war started. It's been a challenging period to be in the markets and trade. We saw that yesterday. Had a few winners, had a few losers after the Fed spoke. But I'll tell you what, these markets are a challenge. So you've got to stick to your discipline. You've got to understand what you want to get accomplished on a given trading session and what exactly you need to do to succeed. So I want to welcome everybody out there. Kelvin, good to see you. Kelvin, Andrea Garwal, always a pleasure, Andrea. Let's go ahead and start off with our orb strategy. Remember, if you need to see exactly what I'm talking about in fine detail, head on over to the How to Trade YouTube channel. Go ahead and just type orb, opening range, breakout, and we've got a few videos in there that can help you really understand what I'm talking about here when I spot this orb trade and set it up for you. But this one was one of our more popular videos. Pretty good stuff there. We give it all to you in real short form. I mean, those videos are short, so you're not going to spend much time learning the strategy. You can see right here, US 100. There's our 2-bar 15-minute orb. There's bar 1, opening bell, ding, ding. There's bar 2. That's the second 15 minutes of the trading session. As you can see right now, we're starting to see a little bit of a disconnect here when it comes to the Dow and the NASDAQ. Right now, the Dow Jones Industrial Average is up about 400 points, about 0.83%. And you see the S&P 500 and the NASDAQ trading negative. Now, we're looking at our US 100 CFD right here, and we're up about 0.38%. This is our orb. This is our opening range. Like it or not, whatever you think of it on a 15-minute time frame, this is it. So when we're taking a look at exactly how to trade this orb strategy, this opening range breakout, you've got to understand where the market may go and what exactly we're expecting here today. So that range right there, I don't love it. It's big. I like the S&P 500 range. We had Tuesday. Nice little breakout there. Didn't get the huge move, but you should have made a little bit of money on that trade. It traded positive for a majority of the day before the late day reversal. We'll talk about that here in just a little bit, how to guard against being swept out late in the day. But you can see right here, nice range. So now what we're waiting for is we're waiting for either a break and a close above this range, which I see is highly unlikely at this point. But we could also see a break and a close beneath this range, which is what I'm expecting right now. Now, as far as what this all means, what these lines mean, it's always important to outline your key levels. You've got to outline your key levels so you have an understanding of, number one, what the market is doing and where exactly we're expecting the market maybe to go to. Right now, we have the overnight low that was established right there on that spike low, about 12 a.m. my time, 2 a.m. Eastern time. That's essentially sort of your pre-market in London. So what you're looking at there is a nice swing low. We sort of came down and did a proximity test. I would have loved this to be much tighter up here so we could play sort of as a test of that overnight low. We've already tested that zone. So now what we're looking to do is we're looking to play potentially a breakout beneath the overnight low and get a runner down beneath yesterday's low. And yesterday's low, you can see right down there, it was at 215. It was right after the close before we sort of rallied, but you can see that low right there. 26.957. So there's a little bit of room to work here. With a bit of luck, we'll get the setup and we can actually dial in and execute the trade before we sign off here today. But right now, rotating back up into that 30 minutes shouldn't surprise anybody. I would love to see a close right down in here. If we could get a close right above that overnight low, then we can play a breakout. I wouldn't say I would get cocky at that point, but I would start to be very confident that we're going to see a washout to the bear. That being said, we're trending, the Dow is trending higher right there. Bobby Bob wants to go US 30. Let's go ahead and go US 30. I don't have this one all dialed up for you with the key levels and things, but you can see here's your 15-minute orb on the US 30. Now, the beautiful thing about this type of a 15-minute chart is, to me, it's relatively obvious what the read is. Now, this is all US pre-market stuff. Spike low there. Sort of there's your top. You can see right there you failed right above that 38% level. So a bullish bias probably is warranted here. The thing is the volumes right now that we're going to see probably for the next hour, hour and a half, 2 hours are going to be a multifold higher than we saw during the overnight. So in a lot of ways, I sort of discount that price action. I'm looking for true price action, but right now you have an A period. That's the opening 15-minute bar. That's your first bar. There's your second bar. If we were looking at a 30-minute chart, then we would still be waiting for our second bar to show up. That would be A period, and we would be watching B period right now. Now, I know I'm moving fast. I probably lost a lot of you. So let's go ahead and draw this orb. It's easy to do. So what we would do here, bar 1, bar 2, 15-minute chart. I like the 15-minute range. I don't hate it. I think that it's a viable way to trade. It sort of limits your liabilities a little bit. My favorite's the 30-minute, though. No question about it. I would rather look at a 30 and maybe buy retracements into the range than the 15, but that's okay. So right here, we're looking for either a close above or below this range, and that'll get us involved in the market. Now, the big problem that we have with this US 30 is it's got a mind of its own. It really has a mind of its own. And so if we're looking for correlations, if we're looking for some way to sort of say, okay, this thing's going to really jam and rally for us, I don't really know what you would look at. Right now, WTI crude oil is off about 1.25%, but it is rallying during the U.S. session. We'll look at the oil here in a minute, but 50, that's incredibly bullish for crude oil. You can see that UK oil is up around 110, 109.82. Very, very, very bullish crude oil. Feels to me like we're going to make another leg up in the Iran war. We're going to talk about that in a minute. And that is essentially what you're dealing with. Now, why would I blow this chart up like this? Because I'm just looking for key levels. Okay, so if you have a market structure or something like this, you say, okay, well, there's a sweep there, sweep there, sweep there, sweep there, sweep there, sweep there. Okay, that's great. You'll notice that these sweeps are corresponding with the early U.S. session. So essentially, if you take a look at this 15-minute chart, you see the volumes down there. This is tick volume, but still we can sort of say that's where the action is with regards to in comparison to the overnight. Okay, so that right there, there's your sweep. Okay, there's your sweep. There's your sweep. So what are we expecting right now? Did we already see our sweep high? Maybe. I don't feel as good about playing this one. I really don't to the top side just because I don't believe we're going to break out and have like a 700-point day today in the Dow. But we may. It's possible. So right there you see the 28th of April. That would be what, Monday's highs? What is today, Thursday? Okay, that would be Tuesday's highs. And then you've got Wednesday right in here. Personally, I would much rather play a correction out of this orb But if I was watching it closely, rules are rules. That's a nice tight range. We have a bullish sort of a setup. Maybe we get a run up there to about like 49.5, something like that. So if we do get this close here in the next 9 minutes, we'll execute that one as well. So looking at the US 100, looking at the US 30 on those opening range breakout strategies. And remember, if you want the full primer and the breakdown of how to trade this stuff with a bunch of nuance here, we've got a lot of videos over on the How to Trade YouTube channel that can get you up and running. So I wanted to go ahead and cover that orb before it got away from us. It's important that we get out in front of things as opposed to sitting around and being reactionary. That's for sure. I'll feel like the Fed. I'll feel like Jay Powell if all I do is talk about what has happened instead of what may happen. So good to see everybody out there in YouTube land. Kelvin, always a pleasure. Kelvin, Joseph, good to see you. Joseph, Emika, Joseph, good morning. Good morning, good evening, good afternoon, wherever you may be in this world, this fine world. Suborno, good to see you, Suborno. What's the software you're using? I'm using TradingView. We're also going to bounce over to MT5 here in a minute and look at the oil markets, but I'm using TradingView because it's faster for me to do the analytics. And when you're doing a live stream, you need to be able to move relatively quickly with price action. And MT5, even though it's a pretty good order entry platform, I don't love it with the analytics. You almost have to draw those up ahead of time, and I'd rather do them on the fly live for you guys. That's what I would say. So I'm using TradingView. Suborno, using TradingView. Let me see. Kelvin, good to see you. Kelvin, welcome. US dollar, Canadian dollar, 15-minute. What do you think for an orb? Well, I think that playing a 15-minute orb on a Forex pair is a challenge right now, just because it's a very short time frame for a Forex pair. Now, I'm more than happy to do it. I would probably discourage that right now. I think that if I was going to do a dollar CAD opening range breakout for a Forex, I probably would be doing it on a 4-hour chart at the beginning of the week, trying to get in on a runner that way. However, I'm more than happy to look at it right after the open. It's instructive. Let's go ahead and look at it, and we can set the trade up. So we got a big move right here. Why do you think we've got the dollar CAD tanking? Because the bids are hitting WTI crude right now. We were down about 3% a minute ago, and now we're only down a 1.5%. Clearly, the money's flying into crude, and crude's driving the Canadian dollar really against the U.S. dollar right now. So the U.S. dollar's off about 0.5%. A lot of reasons for that. Most of it has to do with the Fed. Jay Powell's gone, kind of. He's going to be still on that FOMC board. So what do we expect out of policy moving forward? I expect rate cuts. We're going to look at our expectations here a little bit later in the stream when we start talking fundamentals. But I'm thinking rate cuts. I really believe we're going to get one this year, come hell or high water. But it's a tough environment to cut rates. That being said, dollar CAD right here, 15-minute orb. Okay, if you want it, let's do it. You see right there, there's your 15-minute there. Boom, boom. Those are your opening 2 bars. I would really steer clear of trades like this. I mean, I don't want to throw a bucket of water on anybody's parade. I really don't. But the move's kind of over. That's a significant move there for a Forex pair. You're looking at 136.60, and you went right down there to 136.45. So that's about a 21 pip move in just over 9 minutes or so. So that's a pretty significant move for the Forex pair. If you want to do this trade, and if you're hell bent on doing it, you said, okay, I want to do it. I would wait a little bit. This close could very easily be down in here. Now, if you get this close, maybe this close is up in here somewhere, this bar closes, then we can go ahead and send them short. But I have to tell you that 15-minute charts on a Forex pair, I think that's a bit of a challenge because we just don't see these things move like you see the indices move or like you see WTI crude or gold move. They don't really. Sometimes the Forex, there's no two ways about it. For long periods of time, the Forex majors will go into consolidation, and then you run into this stuff here, this stuff here, and then it's just ridiculous. Why do you think that is? Now, remember, I'm looking at volumes here. These are tick volumes. You're never going to get true volume data out in an OTC market like the Forex. This all has to do with market makers and brokers, all that stuff. It's not exchange-based, meaning my orders don't go through an exchange. They go to the market, which is fine. But you have to trade it a little bit differently than you would, say, a futures contract that I know exactly how many contracts have changed hands. Right here, we're working with tick volumes, which basically we're just talking about how many times the price moves, and that's going to give us a look at maybe how much participation is in each price bar. You'll notice much flatter than we saw with the indices. Indices traded very, very quiet overnight, and then they spike on the U.S. Open. Now volumes, certainly, they are a bit higher, but you could say that they started, almost 3.5 hours ago with the higher volumes. I would be very careful trading a 15-minute orb strategy with a Forex pair with this type of a deal. I think if you're going to do it, you probably are going to have the most success going to a 30-minute chart and waiting for retracements up into that orb to improve your entries. I think this could be really trouble, but we're going to execute it. The problem with an orb is when it doesn't move and it flatlines, you're in big trouble, and you're in big trouble fast. So we're going to wait and see exactly how that happens. Before we go any further, remember, if you want to trade the orb strategy, the opening range breakout, or if you want to trade really anything, you want to trade your majors, your crosses, your exotics, commodities, CFDs on stocks. That's a great one. Something that I wish I had access to. Equity CFDs, that'd be a lot of fun. Individual stocks. If you're an international client in a participating municipality, you can go ahead and get after all the markets that you want to trade over at Switch Markets. Fast withdrawals, 24/7 customer support. If you have any questions at all, go ahead and click the bubble, type something in, and that support, you will get somebody on the live chat with you that will answer any questions that you like. All sorts of different things they offer that I didn't even know they offered. Multiple accounts. They'll set you up with multiple accounts. If you're copy trading, they can get you up and running. If you got a couple different strategies, they'll give you the opportunity to trade really whatever you want to trade. So head on over to Switch and check it out. A lot of value added there in the free resources as well. We've got free EAs, downloadable EAs, downloadable indicators. They got all sorts of stuff. So be sure to head on over there. Check out the service suite at Switch Markets, and they'll get you up and running. All right, let me see. Eli, Euro Swissy was a nice move. Yeah, let's pull up the Euro Swissy here in a second. Might as well. Not sure if I said hi. It's early, so I might have forgot. But all the folks over there in the How to Trade land, Andrea Garwell, good to see Andrea. Tuku, Bobby Bob, good to see everybody back there. I just, for some reason, didn't remember. We've been doing a lot of live streaming, a lot of videos, a lot of writing lately. So and trading, not to mention trading, but a lot going on here. For this week in the markets. Just a tremendous news cycle. We're going to cover the BoE here in a second as well. Talk a little bit about those Great Britain pound pairs, and then we got to get into oil, and then we'll sort of close with metals. We'll take a good look at silver, bounced off of support, and then also gold's just sort of a mess. All right, here's a 15-minute chart on your Euro Swissy. For me, very, very simple. Very, very simple outlook. I'd be looking at maybe the 4-hour. I mean, that's a big move. No question about it. That's a big move. Clearly, the Swiss franc's gaining a little bit of puff across the majors right there. It's also, off big against the U.S. dollar. So that tells us that the money's flying into the Swissy, right? All of a sudden, everybody wants francs. Everybody wants francs. Well, that's great. That's great. That's going to put on a little bit of pressure, on your dollar, on your euro, maybe on your Great Britain pound, Swiss franc. So that's going to be something to watch. Perhaps somebody knows something from the Swiss National Bank. Maybe there's going to be a move in the near future. I don't know exactly what happens. I think, the Swissy traditionally is a safe haven. We see a bit of bullish participation here in gold today. Gold's up. The Swiss franc's up. What does that really say about our markets? It says there's angst out there. How about the dollar, or the Japanese yen? Japanese yen, huge crash in the yen. We're going to cover that in a second as well. But Euro Swissy, so anytime I see a move like this, the first thing I do is step back to about 25,000 feet, and I want to see exactly what's going on. Okay, so we had a demand zone right there that did not hold. That's one of the flaws that you'll find with maybe smart money concepts is you'll get into a situation where you start relying almost exclusively on swing highs and swing lows, and then when they're taken out, they're just really routed. So right now, I would be very, very cautious about taking any sort of long trade. For me, though, just dial it down to a weekly, and you'll notice that we're just working with straight price action. I don't have my Bollingers. I don't have my moving averages, nothing. We're going to work just with price action. A couple observations that you need to look at here if you're interested in trading this, and I hate to do this after the fact, but we have to. So there's sort of your uptrend. Okay, there's your weekly uptrend. Okay, there's your bearish close. Boom. Trend line reversal, right? Trend line reversal. As soon as we broke, done. That trend's in serious jeopardy. And now what you have is sort of the bears ruling the roost and taking over. So how do we want to approach this market? Well, it's kind of too late to get short in my view. The move already came. You probably should have been short from right up here, right around 92-ish, 91, 96. If you're not already, you've already lost 50 pips by not being in. So with that trend sort of being broken in the macro sense, you could see we've sort of broken out. Boom, there's a move. Pull back. Now do we make another leg and a run at this swing low down there that's right around 90? Maybe, or do we just sort of make a move into the guts of this uptrend and maybe rotate sideways from some of these areas that have gotten some bids? So the first thing I'm going to do, you guys know me, you know how I like to approach the markets. I'm going to go ahead, pull a Fibonacci or retracement sequence, and see if we can get anything to line up with a key number. Spike low there, sort of a double top up there, nice double top formation, then a pullback. So right now you're fighting with 38%. So should you be long or short right now? In my view, these lanes, or excuse me, these levels get saturated over time. And the question is there enough buy-side liquidity to support this zone? I don't think so. I really don't. When you see this move right here, that's sort of the top of our range, and then we just had just fist fights for days. That, in my view, that area right there, those 3 days, that probably burnt up all your demand and your buy-side liquidity. It looks to me like this thing's going to come off in a big, big way. Now, you've got 9150 there that potentially could be a big round number that's going to set up as downside support. If it's taken out, I would be watching this thing to fall away immediately down to about 91.25. Now, the thing about this is these just aren't big moves. I mean, they really aren't big moves. We're not talking about hundreds and hundreds of pips. It looks to me like this correction came right off of these highs up here at about 92.50. Boom, there's your move. So there's a couple of ways to look at it. For me, I'm not convinced that the buy-side liquidity is still there from 38%. The reason why is we've hit this thing 3 times, 72-hour period back on the 20th, the 21st, 22nd of April, and now we're retesting that zone to see if anybody's home. I'm not convinced that they are. I think it's a high-risk trade taking the long right now. However, if you wanted to take it and maybe stop yourself out right underneath 50, maybe 44, take a real tight trade and look to maybe get on a runner to the top side, maybe some rotation back up here to 91.75. I don't hate it. I don't hate it. Just understand you're probably going to get stopped out there. But if you don't, you could be in a real great position. They're knocking on the door right now. Is anybody home? That's a real challenge for me to put my finger on. As far as what could we do right here from 62%, 90, 89, maybe 91, that's probably where I would look to buy. And maybe, you know, if you're fortunate, you get it this week. If you see a real big move, a concerted effort here by the sellers, then you could get it down there. But 91-ish, not bad. I mean, I would even be tempted at 91.25, but I'm not into 50% in any way, shape, or form. I would be looking down there at about 91s. I think that would be a pretty good one to get on. So major zone, it's all-time lows. Euro Swissy's all-time lows? I don't know about that. I don't think it's all-time lows. Maybe not, right? 6 of one, half a dozen of the other. Who's counting? All right, let's go ahead and take a look at some of our fundamentals for today. And then I want to get back to our orb, I believe. Do we have our US 100 orb set up? 15-minute 2-bar orb. Where is it? Okay, I mean, this isn't horrible. It's starting to set up for us a little bit. You wanted that close right there on bar 3. That's really where you wanted this. Now, really 11 minutes left. You can see that the bidders are sort of protecting that overnight low. They're stepping up and they're bidding and they're protecting it. Why? Because the US 100 has been incredibly strong over the past month. And the bidders are like, maybe this is just a dip. Let's buy it. Okay, well, if you can buy it, that's great. Now you're starting to rotate. So there is some bidders down here. This looks to me, I mean, perfect world, here's what we want. And as a trader, you probably should be thinking like this. If this sets up in this fashion, this is what I do. You probably want this thing to close somewhere maybe right in here. And then the idea is that we can catch a washout underneath yesterday's low and maybe wash out some of the retail longs and get in on a little bit of a washout there and grab some quick profits on this orb. Now, to execute this trade, I mean, right here, you probably would love this if it closes right in here in the next 10 minutes. But it's got to be outside of our range, number one. Really, you can see our range is valid. We traded inside of it for that third 15 minutes, and now we're at that overnight low. So as we're thinking, as we're watching, we're thinking, we're always thinking. And what do we want? We want the room. I want room to work. I don't want to see this thing run and bang out yesterday's low without us already being in. I want to be in ahead of this to try to get the move. That's what I want. Now, our stop loss is going to be interesting. I don't know that it needs to be put up here. I probably would be playing this one a little bit tighter, maybe have a stop loss right above this bar if it is the signal, and then you're playing that washout. I think that's more along the lines of something I'm comfortable with. I don't know about risking a huge range against such a strong intermonthly trend as we've seen in the US 100. So something to think about there. Tina Jing, good to see you. Tina, welcome. Major zone, we'll see. We'll see how it goes. All right, guys, let's go ahead and touch on some of our fundamentals. I do want to dive into the Great Britain pound because that really is what Johnny on the spot traders, FX traders are trading right now, really after the BoE got involved earlier today. All right, so there's a look at Week 18. It's been an interesting week. Yesterday was the Fed and the BoC. The Fed was a big one. It was Jay Powell's final meeting. We covered it live for you. Thanks for dropping by. Honestly, it was probably one of the most boring things I've ever seen. The markets didn't know what to do about anything, and they just sort of went sideways. Really choppy trading, no directional moves. We've seen a lot better press conferences than that, and it went on forever. I think it was just Jay Powell staying center stage as much as he could, but I thought it should have went much, much shorter, and it went over an hour. So that was a long press conference. You got right here, BoE, GDP, and core PCE. Let's dive in. The news of the day was the BoE. BoE during the pre-market, or during that London session, pre-U.S. market hours, the BoE interest rate decision, they held firm at 3.75%. Nobody voted for a cut. One person voted for a rate hike, and the BoE MPC vote unchanged. Survey says 8. So an 8-1 vote held the rates exactly where they are. As far as what we're looking at now on the weekly, pretty good stuff. I love this zone right down in here. Great Britain pound USD, spike low, spike high. This area with all the convergence is something that I'm really interested in. I love converging indicators. They make me smile. They make me very, very happy. And you can see down there, we've got a 13-week EMA down there at 134.36. You've also got 38% at 134.31. And you've also got a Bollinger midpoint down there at 134.23. I think that zone between about probably 134, 35-ish, somewhere in there, all the way down to 134 is robust support. I would be surprised if we trade beneath that. It's going to take a big market mover to sway this type of this pair in this environment. But I would really like to buy support down there. And right now you can see we're trading about 200 pips higher. So the question is do we get that anytime soon? I don't know that we do or we don't. Let's go ahead and go to a 4-hour chart. 4-hour chart, you can see we're breaking out. We're breaking out. So right now the U.S. dollar is on the ropes, off about 0.75%, 0.69. Spike low there to a high. I would probably be in pullback mode. I'd love to buy pullbacks here in this Great Britain pound USD. But as far as what can we do right this minute, well, the train's sort of already left the station, but you're probably looking for pullbacks. So if you went to a 30-minute chart, say, something like this, I mean, really, really tight, and then there's your break. It's going to be tough to get a trade. It really is, but maybe a pullback down into this area, this demand zone. You know, you could almost say it's a rally-base, rally, maybe a base, and then a rally. You might be able to be picking up bids from 135.25, maybe 135s. Bullish, though, right now. No question about it, and that's after the BoE sort of held firm. So what's the deal here? Well, I mean, the dollar's on the ropes, clearly. It's off a little bit. But this is sort of the other part of that Great Britain pound narrative. Bank of England hints at higher rates as Iran war fuels inflation. And this is what the central bankers are all saying. You'll find over time that when you talk to central bankers or listen to them, they're always ambiguous. And they're always willing to pass the buck because they know the responsibility to promote that maximum employment and that pricing stability. They know that that responsibility flows through their central bank. And anything they can say that says, hey, listen, this isn't necessarily our fault. It happens every single time, whether it's COVID-19, whether it's the tariff shock of 2025, whether it's the Iran war. The bankers are always sure that you know exactly what's going on. So war in the Middle East is causing inflation. We'll continue to monitor the situation closely on its impact on the UK economy. Whatever happens, our job is to make sure that inflation gets back to the 2% target after the initial impact of the war on energy prices has passed. So what does all that mean? Basically, it means that they're not afraid to raise interest rates if they have to. That's what we're seeing from central bankers is, hey, we reserve the right to raise rates if we want. And I expect the same out of Kevin Warsh when he's sworn in, but I don't think that he's going to do it. So everybody's talking rate hikes. The BOJ talked rate hikes. Now the BoE is talking rate hikes. I didn't see too much verbiage like that out of the Bank of Canada, but the U.S., Jay Powell said nothing yesterday for an hour. So I don't really know where the United States policy is going. Excuse me. So at this point, we're in a holding pattern. Now, Great Britain pound Japanese yen. I mean, the Japanese yen's on fire. This will be sort of where we start our discussion on the yen. Take a look at the daily chart. This is pretty good stuff. I mean, just an absolute major move. Went right down to this zone, this demand zone here, and bounced, okay? For right this minute, I would be in sell mode. Sell mode, 4-hour chart, pretty good market structure. You can see exactly how far we've really blown beneath that Bollinger midpoint, or excuse me, my Bollinger bands, way beneath the Bollinger midpoint. Something like that, though. 8-hour range, spike high, spike low. I'm selling 38% all day long. So let's go ahead and pull up our trade bar. What do we want to do? Paper trading. Remember, everything I do here is on demo. I'm not a financial advisor. I'm not a copy trader. I'm not a signal provider. We're just talking more along the lines of educational value here and sort of showing you a few trades that I would be looking at making, or if I'm not already making. So something like that. We don't want to buy, though. We want to sell, and you want to limit order right in that zone. So essentially, that would be sort of your late-day sell here in the Great Britain pound Japanese yen. What would you be looking for? Well, I'd be looking for probably trend continuation, so my take profit would be somewhere down in here. Clearly, I mean, my size is huge there, so don't put any stock in that. But probably, if you're looking to sell 212.70s, maybe like a 212.25, something like that. Maybe if you want to scalp, maybe 212.50, maybe 212.40, something like that. It's a pretty good area. It's a pretty good area right there. Nice big breakout. It looks to me like we're gonna test that, which is fantastic. Fantastic. So remember, when you hit these levels with a trend, and it looks to me like it's a very strong intraday trend, if you do get in there, you don't have to stick around waiting for new lows. You can just take the money as it becomes available, and that's something that I've sort of preached for a long, long time. But, the numbers, the leverage is off, so don't get confused by the leverage. That's definitely that's a big trade, $1 million. That's a pretty big trade, but if you've got it, you've got it. Let's go right here. Dollar yen is another thing I want to look at. So 30-minute chart dollar yen, you can see really the same price action we were just looking at in that last pair, but there's your spike high. There's just a tremendous rally, a tremendous sell-off, a rally from the sellers, the bears. The bears rallied, and you're right there at 12 a.m. my time, so that's about 2 a.m. Eastern, right before your London opens right in here. Boom, there's your big move. Market fell away, and now the U.S. session, we're sort of chopping back. Still, though, it's hard to argue with a trend like that. So if you were going to make potentially a trade here on this type of environment, in this type of trend, it would be pretty much the same setup. Spike high right there, spike low right there. Looking to sell 157.50, somewhere in that zone. I like this one much better just because of the big round number, 157.50-ish, maybe selling 48s, looking for sort of a dive down in here of about 50 pips or something like that is very doable. Very doable. One thing I do want to point out, you'll notice that when things get chaotic and crazy in the Forex, what do you typically see? You always see fake outs. I mean, you really always see fake outs. So what happened here? All of your retail shorts got banged out right there. They got banged out, peaked its head, knocked everybody out. Everybody that was using market structure or the smart money concepts and all the things that traders love to use by just reading price action will understand that swing highs, everybody knows where they're at. Computers know where they're at. AI knows where it's at. I know where it's at. You know where it's at because it's obvious. You can see it. And that's one of my real issues with sort of building our trades based purely on market structure is everybody can see where you're at. Everybody knew where the stop losses were right there for those shorts. They banged them out, knocked everybody out, and then, of course, the market reverses and plummets. So you got to be a little bit smarter than the average bear if you're going to do that. I always recommend instead of putting your stop loss maybe right above a swing high, you put it maybe up a little bit, or maybe you just watch the trade occur in this area. Once it broke above that top, which it looks to me like it was probably a daily high if I had to guess. Yeah, there's your daily high. So this looks like a breakout trend here. It does. It's compression, 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 break outside of those Bollinger Bands, and then what happens? What happens on this break? You got stop losses. People are playing it. Boom. They get knocked out. Sellers come in and dominate. Really tough trading because the folks that were long, they got nailed too. This reversal nailed them, and the folks that were short, that right there nailed them. So you got to be a little bit smarter when you're playing these charts. Understand that everybody sees daily highs. Everybody sees swing highs. Everybody sees weekly highs, monthly highs, yearly highs. It all needs to be on your chart, and you have to recognize, okay, they all see it. I'm not the only one that sees it. They all see it too. Very, very important. Let's get back to our orb, see if we got a trade. Nope, we don't have a trade. Bummer. I wanted that trade right there so we could execute. More than likely, this is probably going to fall away and wipe out yesterday's low without getting us in. That's a bit of a shame. I was really looking to get something done there. Okay, so here you go. So this would have been your 15-minute orb on the US 30. Of course, I missed it because we were talking about something else. But right there's bar one. There's bar two. There was your entry. Nice big move. So if you're playing the US 30, you probably got a nice big move there. Stop loss could be beneath that orb completely. And so if you're looking to do something like that, more than likely you've got to dial in your profit target at least there. A lot of folks probably doing this one where they're looking for like a 1 to 2, something like that. Then we're, stop loss down there conventionally. You still need to get a significant move to make that trade sing. If you're looking at even a 1 to 2, a lot of traders love 1 to 4s, 1 to 5s on this strategy. If you do employ that type of money management, you're going to take a lot of losers. But right now, look what has to happen for us to hit a 1 to 2. That's why I'm not a real big fan of it, trying to take these big moves. That's just me, though. That's just me. You're looking right there. So your profit target, your profit target's up there at about 49.925 potentially. What are we trading right now? 49.4. So you're looking for another 500 points. So basically, you're betting that we're going to close probably over 1,000 points up today. That's rare. I mean, that would be what you call a long tail event. We don't see many closes above 1,000 points in the Dow. We really don't. So if you're in there and you're making that trade, great. I'd probably be doing something more conservative, something like that. This right here, maybe a 1 to 1. Dial that thing in perfectly right there. Maybe something like that. There's your target. To me, that's doable. 49.611, 49.6. That's doable. You're only up, another 150 points? We could do that. We could do 700. We could touch. I'm not saying that we couldn't touch 1,000, but are we going to close above 1,000? Man, that's going to be tough. That's going to be really tough, especially when you see the NASDAQ sort of struggling a little bit. Curious and curiouser. These markets are really an enigma trapped in a riddle at this point. That's for sure. Let me see. Smart Money 77. Use a pivot stop to trail. Place the stop beneath the nearest pivot and trail using the 20 EMA and 7 until it breaks. I love it. I love it. A solid methodology for a trailing stop. Absolutely. There's nothing wrong with that. The problem that I have with a lot of folks that play trailing stops is they would be in a trade like this. So there right there would be your entry, right? And they would say, okay, I'm just going to trail it according to symmetry. It can work. When you have perfect symmetry and a real hot trend, it'll work. Pretty much anything does at that point. But most of these times, you're going to see somebody's going to check beneath, and then the rally is going to continue. So with your type of so what you'd be going 20 EMA. All right, let's just take a look at it. Moving average. Boom, right there. Let's dial it in for a 20. It's a good idea. I mean, I'm always up for ideas. I really am. Okay, so right there is going to be your 20 EMA, right down in here. So you're going to be looking at a nearest pivot and trail using the 20 EMA, 7 until it breaks. All right, I'm not sure what the 7 means, but 20 EMA until it breaks. So your stop loss would be beneath the 20 EMA. I don't hate it. I really don't hate it. I think it's a good idea. It's dynamic, and what it can do is get you into that monster move where I really am just putting an artificial cap on this trade. Let's say you get into a huge day and this thing rallies 2,000 points or 1,500 points. The way that I look at it is it's probably an outlier event for the market to move that high, but it is possible. Anything's possible. There are no rules. So this is an interesting way to manage a trailing stop. I think it's a good idea. I don't have a problem with it. 20 EMA. The only thing I would say is this 20 EMA is probably not going to get to break even until we already have a tremendous rally. So if we pull back to that zone, you're going to give a lot back potentially. But I don't hate it. It's a structured way to do it. So for me, I'm a simple man. I think in concrete terms. That dynamic trading stuff's tough, right? No, I just find something that works for you guys. Find something that works and stick with it. All right, we still got a lot to cover here. We're burning daylight. So let's get out to crude oil. Crude oil has been a big one. You can see right here. This is a good look at our WTI and Brent crude daily charts. OPEC took a major blow. The UAE, it was announced about 48 hours ago, a little bit over that now, probably 60 hours ago, that the UAE, the United Arab Emirates, were going to leave OPEC. They were going to exit OPEC. They've been a part of OPEC for 60 years. 59 years. And they're getting out. They don't want to mess with Saudi Arabia anymore. They want to pump their own oil. They want to boost the production of the UAE. Wants to hit 5 million barrels per day by 2027. It's incredibly doable. They also want to craft their own deals, whether that's with the United States, whether that's with Europe, whether that's with China. They want to get in on what is the global energy market in a self-contained capacity. Well, big reason for this is the Iran war. No question about it. It's the supply disruptions. It's the problems in the Strait of Hormuz, and essentially saying, hey, listen, I don't want to go along with any of this. We want to go out on our own. Is now the best time to be doing that? It's interesting. It's interesting timing. So if nothing else comes out of this Iran war, and a lot of folks, I'm going to show you the numbers here in a minute why many believe it's a stalemate. If nothing else comes out of it, OPEC's shattered. So now who's OPEC? Think about it. Who is in OPEC? Think about the big oil producers in this world. What's happened to them in the last year? You're talking about the UAE? Okay, UAE is on its own now. How about Venezuela? Nobody's even talking about Venezuela. Venezuela was a major global player in oil, not necessarily light, sweet crude. The oil down there is a little bit dirtier, but still it's oil. So you're talking about a major shift in the global energy dynamic, in one that could make the United States even more of a net exporter of crude oil. That may be the plan. I don't know. But what we're seeing here was a major rally of more than 10%, really since the UAE ditched OPEC. So you've got WTI, this trade somewhere right around 108.50, and then you've got Brent somewhere up around 116. Now, these are CFDs. These aren't necessarily the exact prices of crude oil. You can see right here, this UK oil is about 110. U.S. oil is 106. I have WTI futures right around 106. So there's always variance between CFD products and futures. I would always sort of stick to the CFDs that are tracking the futures, but the price action and the charts, they look very much the same. They look very much the same. So there's sort of a look at our oil. This is on your MT5 platform. One nice feature, if you're with Switch Markets, you get these bulletins, so you can see upcoming trading schedule adjustments. You can see that we've got a lot of holidays coming up. Tomorrow, May 1st, May Day, essentially. You've got really Europe's closed for business, and you've got a lot going on abroad. So I would say that tomorrow's going to be an interesting day. U.S. Stocks are going to be up and rolling for the first day of May, so I'm not really expecting any changes here in the United States. But we are watching right now the developments in WTI and Brent sort of coming off a little bit. WTI may give us an opportunity to buy. You know, let's say we want to get in there and maybe buy this thing. U.S. oil, nice pullback on the daily. What could we really be looking to do, though? I mean, really, there's a big move. What do you have here? Spike low. You can go from that spike low to that high, maybe be buying 98s. I mean, if you're going to buy 98s or 99s, you're probably buying 100s as well. Something like this is fascinating to me because it's a deep pullback. I mean, we have to pull back another $6 or $7 to get involved. But I like this 13-period EMA, this 13-day EMA at 97.66. Odds are in the next several sessions, we're going to get that convergence that I love so much, that I'm so fond of. I should write a song about converging indicators. Might be a pretty good one. But in any case, right there, that's the zone I would love to hit. I would love to hit that today or tomorrow, but I would love that 13-period EMA to come right up in there and give us a real, true, high-probability trade. That would be fantastic. As far as U.S. oil goes, I'm still bullish. I'm still extremely bullish here. I think that if the wrong news item drops, we could be in a new world very, very quickly. And this is what it all stems from, guys, the Iran war. Ignore that one. That market, I think they're still arguing about settlement. That'll happen, especially when you have $178 million worth of volume on one prediction market. I'd say it's pretty big. Will the Iran regime fall by the end of April? That's not going to happen. So the markets that I'm looking at right now are sort of, okay, is a U.S. invasion ever coming? About a month ago, we believed it was coming. I believed it was coming. No question about it. Hasn't happened yet. Big buildup in the region. I do believe the United States has pulled an aircraft carrier group out of that region now, though. The Gerald Ford, I believe, is heading out of the region, which is a big deal. You've also got June 30th here, 15% that Karg Island is still under Iranian control. It does not look like you're going to see that U.S. invasion we talked a lot about. Looks like it's off the board. So 7% chance that the traffic returns to normal in about 2 weeks by May 15th. Watching that closely. I think that you may get it. You may not get it. Strait of Hormuz is the problem. I mean, it really is. The rest of it is just missiles flying and infrastructure being blown up. But the problem globally is the Strait of Hormuz. So announces the end of military operations. I think this is probably the one that cashes. I would be absolutely shocked. I would be shocked if the United States is still engaged by June 30th. I really would. The United States has declared victory how many times now? I believe it was 30-something times. They've said the war is over and that it's been a complete military success. I believe Trump and his cabinet members have said that about 30 times publicly in the press. So I could see a world where Trump does declare a victory and leave. It's just there's so many unknowns here. There's so many unknowns. But what all this stuff tells us is that, okay, there's all these markets and some people believe something. They're betting on diplomatic meetings and all these things. We know the regime's not going to fall anytime soon. Those folks are way underground and they're in full control. Now, we could argue about what the regime looks like. It's definitely fragmented. There's no question about that. But will the Iranian regime fall? Probably not. And that's going to be a much different conversation. Will the U.S. invade Iran before 2027? Only a 35% chance. There was a time not too long ago, March 29th, about a month ago, where we believed it was done. And I was one of those people. I said, they're going in. They're going in hard, either to restore the flow out of the Strait of Hormuz, or they're going to take Karg Island and really apply the pressure, put the screws to Iran. So right now you have a naval blockade. The United States has put a blockade of its own on the Strait. They said, fine, if we can't go through it, nobody can go through it type of a deal. I don't really know the state of any of it. I think that there's so many different ways this can go. This could go escalation. There could be boots on the ground. There could also be, Trump administration throwing their hands in the air and declaring victory. But this chart really tells us a ton about what is going on. Will the U.S. invade before 2027? That means by the end of the year, does the United States have boots on the ground? Right now, they're not really looking at it. They're saying 35% chance. I don't think it's 50-50. I think that it could happen, but I don't know that it happens in an election year. I think maybe right after the election in November, then maybe. But I don't think they send them this summer. That's just my opinion, and that's a complete 180 from me in the last month just by what I've seen. I thought they were going to go in hard right away, and they didn't do it. And I think a lot of people wanted to do it, but they didn't do it. That's for sure. All right, so let's go ahead and take a look at a couple of things. We're going to look at metals and then a couple of fundamentals, and then we got to look at the Fed watch. So we still got a bunch to do here. Okay, we're going to look at silver. This is interesting to me. I put this chart out in our weekly market analytics. This was a midweek brief this week. You can see that the silver market, I got a lot of static for this one. They said, what do you mean the upper value? The liquidity sweep happened up there at 82.50, 83. And I go, I don't care about that really. I care about where the action was over a prolonged period. You can see for this 5-day period right here, it was all about 80. And anytime a market is sort of chaotic, I lean on big round numbers in a big way. A lot of people believe that's sophomoric. I don't care. I like them. They're a guideline. That is how the open auction system works. Now, it's not open outcry. We're not in the pits, but this is an auction. Everything we participate in every single day is an auction. We're trying to figure out what something's worth at a given point in time, and that's the reason why price is always changing. As time moves, variables come in. I come in, you come in, and price moves. That's just the way that it works. That's price discovery, right? Well, 80 is a big deal. There's no question about it. You could not sustain trade above 80. You had one close up here, and then it immediately came down. Only for the same action, sort of down here at 70. You can see right there, there's really the end of the month, March 31st. April's traded entirely above 70. I love my daily Bollinger midpoint, or excuse me, my Bollinger band. I keep saying midpoint. My lower Bollinger band right down there is right around 70.08. 85 is 70.08. And you can see that low came right in at about 71.22. We were looking for a little bit better action. That was 70.86 yesterday. So I would love to be a bidder down here at 70, just above 70. I think that would be great with the idea that we're going to rotate back up to 75. And I just don't really see any reason to abandon this chart just yet. We haven't moved. We're trading beneath 80, 70. Tomorrow, the first day of May, maybe tomorrow's the day. Maybe tomorrow we get the big break from silver, and we get a commitment out of traders, because right now we're just rotating around 75. To me, it's relatively easy strategy. Until proven otherwise, you're looking to sell upper value and buy lower value. It really is that easy. The beauty of trading a reversion to the mean strategy like this, I mean, you can see 75 right in the middle of 70 and 80. That's the mean, the middle, the midpoint, the average, whatever you want to call it. There it is. So I'm looking at that closely. You'll also notice that our 13-day EMA is coming right down there at 75 and a quarter. That's going to be a big deal. It's going to be a level that's tested. Should we sell 75s? I'd say yeah, but just be ready for it. It's going to be dirty in there. It's not going to be, okay, a clean hit and then a nice big pullback. It's going to be dirty in there. You're probably going to trade above 75 and then maybe come back down below it. Why? Because this area has been saturated. The buy side and sell side liquidity, I mean, it's anybody's guess who's left standing at 75. This market, all roads sort of point towards 75. And until proven otherwise, that's pretty much the analytics I'm going to stick with. As far as gold goes, gold's ridiculously difficult right now. I pulled up this daily chart on the 920 EMA crossover. That same How to Trade YouTube channel's got a full slate of 920 videos for you as well. You can see there was the buy. That was a loser. There was the sell. That could be a loser. This was a really nice move. That was a sell signal on the doji. You can see the purples are sells. The golds are buys. It's funny how often we get dojis. You got to blow that up to see that it's a sell, but it is, and this is our coded 920 EMA strategy. I really like it. I think it's a good one, especially on a daily time frame. Great swing trading approach. But you can see right there was your bid. You probably should be out of that by now. If you risk this down here, you could still be in it, I guess, but that's such a huge trade. I would have stopped myself out almost immediately, if not beneath the signal bar itself on a daily chart, probably beneath that swing low right there. I'm gone. So is the sell still in there? Yeah, the sell is working. I mean, you got the sell there, nice big move. So you could have made a little bit of money shorting. But the problem that I have with all of this 920 action on gold, is that we're getting that weave formation. We're getting frequent crossovers. There's one. It looks like we're maybe building another one. And what that screams to us is just absolute consolidation. And consolidating markets are just a nuisance. I mean, really, that's just in a phone booth, very, very flat. None of these big moves anymore. Now the market is just absolutely flatlined. So for me, there's enough volume, there's enough participation and volatility to trade intraday. But as far as what can we do right this minute, for me, it's real simple. I step back. I take a look I say, okay, what are the longer time frames telling me to do? Okay, there it is. Spike low, spike high. You'll notice that this 920, these are converging, and that should tell you that the market's flattening out. 38%, is that a pretty good support zone? Maybe a late day support zone, somewhere right around there, 58.90-ish. Not bad. 62% is a good one. 44.05, somewhere down in there. That would be my preferable trade. I would much rather go long there. Let's take a look at the daily, and you can see exactly what's happening. We just have sort of garbage here. You probably could have got a nice tight scalp off of that, the first approach. Now that area right around that 44.75, 45.75 to maybe 45.90, that area right in there is highly saturated. We've just been trading it religiously for 72 hours. Not really interested in buying 45.90s. Just don't really see it happening. As far as the short time frames going, what do we have on, say, the 30-minute chart? Nice big bullish break today, but it was coming off of sort of a bearish loser. That right there was on the precursor to the London session. So you could have got that move. But for me, I mean, gold is a real tricky one right now. It's a real tricky one. So you've got to be careful if you're trading bullion right in this minute. All right, let's take a look at our Fed interest rate expectations. Something like this is very instructive. We are going to have a new Fed chief. So what happened to our odds after yesterday's meeting? 96.9% still believe you're going to hold firm at that June meeting. How about July? Do we start pricing a rate cut then? About 10% chance of a rate cut. Right there, 3.5 to 3.75. That's going to be interesting. How about September? Something like this, 88.9, about a 12% chance. How about October? About the same. How about December? That's really what we're looking for. Well, pretty good percent, 83% chance that you stay. Maybe a rate hike, maybe a rate cut. Nobody really knows. Nobody really knows right now. So we're basically betting. The markets are pricing that interest rates stay the same throughout the rest of this year. They don't believe Warsh is going to cut interest rates. I disagree. I'm sort of looking for maybe one of those long tail events where there's an aggressive initial cut, an aggressive one. And perhaps that's the case. But in order for that to happen, the Iran war's got to be wrapped up, and you've got to see crude oil at least trading down around 80, I would think. And even that's elevated. So we don't really know. But let's get in our time machine a little bit further. How about the 8th of December 2027? How about that? Now you start to see our bell curve set up, our distribution, our normal distribution, and you can see that by the end of not this year but next year, we're starting to think that maybe there's only a quarter-point rate cut. Maybe that's sort of where most people believe it's either going to be the same or down a quarter. This is going to change dramatically. I think you're going to start seeing this shift way over here, and I think that's the game plan from the Trump administration, and that's the game plan from Warsh. who's going to be the new Fed chair. It looks like he's going to be approved here relatively soon. I think that's going to be a big deal because this distribution, this normal distribution, this bell curve, I expect it to start shifting over here as soon as the war's over. And when that is, that's anybody's guess. Absolutely anybody's guess. That's for sure. All right, a couple more events to cover here aside from the BoE, and then we'll go ahead and call it a day. U.S. GDP, sort of a not necessarily the best number. This is a preliminary figure for Q1 2026, came in at 2%, beneath the 2.2 expected, but up from Q4 of 2025. The problem with this is it's a preliminary metric, and honestly, I expect it to be revised down. We'll wait and see. But this number could definitely be revised down. Core PCE price index came in about 3.2%. Initial jobless claims, very strong actually, down big from the previous release, which was last week, well beneath expectations. So the jobs market, maybe a little bit better than we think. Who knows? PCE price index, this is going to be our focus, and we're looking at something like basically the PCE up 0.7%, up from 0.4. It really is rocking and rolling year over year from March, and the reason why is it includes fuel. So we take a look at what happened today. U.S. PCE price index rose 0.7 month over month, matching expectations and accelerating. It was the steepest monthly increase in PCE since June of 2022, and essentially that's the deal. What happens when you have a war and gas prices spike and oil prices spike? Your inflation spikes. So that PCE price index, not core, regular, they didn't strip out the fuel. You're looking at that type of a rise. We haven't seen that since 2022, and really since the big sort of the negative, the deflation of COVID. Then we got into our inflationary cycle. It ran extra hot, extra crispy in 2022. And then right in here, it was still relatively high. That's why I am just constantly arguing about that. I talked about that yesterday. Jay Powell cutting interest rates in this type of environment right in here. It just doesn't make any sense. And really, since that rate cut, has inflation gone down? Not really, but this war, definitely a huge inflation market driver, especially with regards to PCE. No question about it. All right, everybody, that's pretty much a wrap for me today. Let's go ahead and see how our orbs are doing. That US 30 orb's good, Bobby Bob. I hope you got it. I mean, that was good. It was one that I really didn't like, but you're starting to see that just trend higher and higher and higher. Let's go ahead and go to our US 100, and there's the reversal. Fantastic. This is why we wait for our confirmation. I can't stress that enough. You can't try to jump the gun and say, okay, well, if I'm going to wait till down here to sell, why don't I just sell right now and try to play that breakout? It doesn't work that way. You've got to get confirmation. Why? Because it saved us. It saved our bacon. Take a look at what happened here. We sold off. We went and tested that overnight low. Boom, boom. All of a sudden, those bidders were still there. Long side liquidity enters the market. The market starts to rally. Yada, yada, yada. It's not a good situation if you're holding shorts right now. You've got to wait for confirmation. If you don't, you're just guessing. That's all there is to it. All right, everybody, I'm going to go ahead and sign off. We've done a lot of live streaming here in about the past 18 hours. So I'll be back tomorrow. We're going to do our exclusive Switch Markets live webinar. We're going to do the 5813 EMA scalping strategy, and that is going to be exclusively on the Switch Markets YouTube channel. It won't be on the Forex Signals TV. It won't be on the How to Trade TV. It's going to be over at Switch Markets. So you're going to want to check that out, and you can also see it in the How to Trade trading room as well. All right, everybody, that's a wrap for me. You guys have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.